The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, this 12th day of November. My pleasure to be here. And just don't forget there are fabulous shows all the way through until 6 this evening, right here at TFNN. And a couple of things that I want to just get out the way right now is number one, in my opening call, the picture that I've been painting for the past 3-4 weeks or so has been one where it says that the Chapman wave methodology, which identifies the lowest low bar and then merely counts each successively higher peak until you get to a D, is still active. And in the E-mini, we had a little discrepancy because the E-mini December future was only in leg B, while the Dow, the S&P daily, and the DIA and the SPY were in leg C. So there's a little discrepancy there, with the implication being that all the little ducks should line up together before you get any kind of a sell signal. And the other thing was, that is the daily sell signal, and the other was that the weekly chart had in fact produced a whopping leg to the upside. And how we negotiate the various resistance and support levels over the coming week or two is going to be really important. And it is, I had a couple of questions about this. It is rare that you get a peak E or an F, which implies, watch out, because at any point you get a very sharp decline, or a brand new leg A in the Chapman wave methodology, which says, all clear. You just want to buy everything that declines, because you're not only going to go to a leg A to a peak A and then a pullback, but you're going to go to a peak B, a higher peak C, and a higher peak D. That's the way the methodology works. And as such, I needed confirmation as to where the weekly charts are. But that doesn't negate any of the buy signals that we have, because we haven't even gotten to the point where we've got to be real careful in that we're getting close to, we hadn't gotten close to a peak D. So now you'll see that in the charts that I'm showing, you've got leg B, which is almost certainly going to make a peak B today, because it's hardly likely we're going to go above the 2039 round number high of peak D in the 120-minute chart. We're in the rectangle consolidation phase. Trading right now at 2029, that's 10 points below. And here's the other thing, and I'll get to it because it's a question both in the den and a question that I posed to my subscribers. And what I'd said is that the VIX index in the very low teens or below the teens, in the 12s, etc., 12, 11 area, is saying that there is still internal buying, residual buying, internal buying. The pressure of the buying pressure is still there. And having flattened out in the stochastic at 6.43%, and the MACD just flattening out now for the first time with a rising histogram, but not really a rising price in the fast-moving average, the green 9-period differential, there is still tremendous selling pressure in the VIX, buying pressure in the general stock market. Now, there are a bunch of other things that I discuss with my subscribers that pertains to charts that you need to see, you need to be looking at. So I'll try to get to some of that just now, but it is leg B up in the VIX index 120-minute chart. So that's saying this selling pressure is probably going to last into tomorrow. At the same time, so that was the one aspect that I want to talk about. The other aspect is rotation. And if we continue to see rotational markets that basically create a high-level consolidation as one sector pulls back and another sector starts to garner buying pressure, then what we're looking at is the big declines of double-digit percentages can be avoided for a little while longer. And what I've said is that if I get the signals that say this is absolutely a weekly, and I had a good question here, let me just go to it, NDX, and then I want to go to our callers. So if Mark doesn't mind holding on just a tad longer. We've got a leg D, possible peak D in the NDX 100. That corresponds to the leg D possible peak D today in the QQQ series. I'm going to use the QQQ series just because it's the one that most people out there can easily type in QQQ, but you don't always know how to get to your NDX 100 index. So I'll use this because the price should parallel extremely well. Let me see if it does. The NDX, that was a... Yes, okay, exactly the same. All right, here we go. So the question is, well, first of all, the question is, in the daily chart, let me go to the daily chart. I've got a potential peak D, and the question is, could there be an instant restart here? I know, I'm not sure I can do this. Probably Friday I'll spend a little more time on it. But what I'm going to say right now is that the chances are that, yes, you can get the signal for an instant restart. That's after peak D, the fourth highest peak. Certain characteristics are formed within 3 bars of making a new high. And if that is an instant restart, it should go to at least another D. I have another interpretation, and it says that it will not go higher than a G if it goes higher. And that could very well correspond to all those indices that I mentioned for my subscribers in my opening call section that's called Overview and Market Today, where I labeled all the different, the key indices where they are. The ones that are in leg B, possibly making a peak B today, second highest peak, say that there's a really good chance that we are going to continue going higher into next week. And I'm sorry, I just didn't realize that Mark was on the time schedule. Mark, I hope you're listening. Call back as I'm talking. I'm going to go right to you right now. I know you're not there because you had to hop off, but he wanted to look at Vail. Now, the reason why I didn't jump onto any of the commodity-related stocks in my opening call over the past week until, 3 days ago, we bought a gold stock. 2 days ago. I don't know, time flies. And it did really well. Yes, and it did really well, spiraling up yesterday. Today it's consolidating. It's because this is a very select move right now. So Vail, and let me just quickly do this because for the life of me, I can never remember exactly what Valet, but we'll call it Vail for now. Vail something, Vail S.A. So it's an overseas company. It is, let me just go there. It is Uma das Mores. All right, so we're not going to go there. Let's go to the language I can understand. There we go. A Brazilian multinational diversified metals and mining corporation and one of the largest logistics operators in Brazil. In addition to bringing, it goes on. So now we know. Most of you did know. I just never remember exactly what products they're mining, but I think it's minerals per se. And Vale. I've heard it pronounced so many different ways, but I think it was Vale is the way I last heard it That was the pronunciation. So now what we've got is Vale is at 8.94, up 2 cents, having made a low bar, a multi-year low bar yesterday at $8.76. Let me type that in. 8.76. And now there's a little bit of a rally bounce this morning. Now the big question is this going to be a turnaround that's tradable? Is it a... And I need to do this because this is what I really wanted to show. Let me show you something, because I know I've used this as an example many times. I used to have it notated beautifully. Don't know what happened to that. All right, you see the 200-period moving average that was unbelievable support back in November and December of 2008 in the 861 area. It goes peak A, B, C, D, pulls back, holds the 9-period moving average, 9-period differential in the monthly chart and the MACD, and then spirals to a right arm extension to 37.25 back in 2011. Was that on January or December? It was January of 2011. And then comes down A, B, C, D, E, F, recycles, and it goes A, B, C. Now, there could have been a recycle then. That could be A, B, C, D right now. So what we're looking at is that the monthly chart just looks absolutely horrendous. No. Let me be polite. It looks really ugly. So there's nothing there. The MACD actually is showing a little sign of strength. The stochastic is just turned down at 10%. It looks like it wants to go lower. The weekly chart is probably of a degree, maybe 3 times as ugly. It really looks just terrible. But there is a potential, and I drew this in a long time ago, there is a potential for, I don't know why we didn't actually trade it that way. Sometimes, you know, you do things, you do so many things that you don't get a chance to actually, there it is. So here we are. Here's the one-to-one to the downside, and that takes you to, well, that takes you to $7, around about $7.60. The low so far, let me show you what I mean. This is going to be in red. There you are. That's that arch formation that sometimes give you the one-to-one to the downside. Now look what's happened. Vale has gone down to a lower low. Let me expand this a little bit. Yeah, I'm going to use the monthly chart. It's gone to a lower low, but the month hasn't closed, so there's a good chance that it'll try to bounce and close just above $8.61. It's trading right now at $8.94. But 2 things are very important here. And that is, the monthly chart is showing that if there is a rally, it'll only start off as a bounce, and that bounce has tremendous resistance at 11.90. Nobody's going to complain if you pick it up at 8.94 and it goes to 11.90. 3 points is over 30%. That is very good. However, on the way to that, there's a lot that we have to take into consideration. So I'm stalling here only because I want to spend a little time on the 120-minute chart. I want to have a quick look at it, and I want to look at the date, expand a little bit. My gut instinct right now is to say, as a trade, maybe a little bit here, but how about I take a moment and I take this break and I will work on it. Down 63. It's down 7. Oh, I forgot.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. We are back. The Dow is down 42 at 17,572. S&P is down 4 at 2,035. Let me just double check here. You've got the comp index down 3 at 46.56. Gold is now up 1 at 11.63. This is fascinating, the way it's struggling, but I think it's going to have a little pop, a little further move to the upside as the dollar consolidates a little bit. We're going to watch it closely. Silver is up, down 5 cents at 15.62. Platinum's down. You've got high-grade copper at 303. Nice action, but no. Okay action in copper. I need it up in the 350 or higher area to really feel comfortable about it. Crude oil is at 77.38, down 56 cents. Bonds are up 22.30 seconds at 141.13 seconds, and you've got the dollar now down 4 ticks at 87.67. I was looking at Valet and Valet. I also have the VIX up. I need to talk about that. Okay. So what I'm looking at here is that there's a chance, and I'll draw it in, for Valet to make a pattern that says, I'm going to try for the 938 area, but it's going to be really difficult because this flat stochastic, let me show you what I'm talking about. The flat stochastic is where the stochastic, yep, let me show you something. You see the stochastics holding flat? It broke under the 20% line, and now it's just dead. It's at 4.92. It's just flattening out there. Compare it to this. Compare it to this. See the SPY? You see the way it's sitting there in the 90s at 98%. The Dow was at 99%. Now it's at 98%. Now, that can stay for quite a while. Look how long it held from about the 19th, let's call it about the 22nd of August, all the way through until it broke down early in September. Remember, the top was on the 19th, but in fact, it held all the way through. And then it's still at internal strength because the price never broke down. So if you use the same theory upside down with Valet, it could, in fact, go lower, but it's starting to say that the downside might be limited to about a point and a half. Say, test the low sevens, just at this particular moment, and that it could very well have a little bit of a rally to the upside. But until the stochastic really starts to trade in the teens, 15% area, it's going to be really tough. So here's my answer to you. I'm sorry it took so long, Mark in Spokane Valley, and I'm sorry I didn't get to your call quicker. I hope you're listening. Sometimes people call in, they just can't listen for their full amount. When you call in, say you can wait a little bit or say, I'm in a hurry. And then my wonderful engineer, Al, will just go right in and say, in a hurry, and I'll get you right away. Because sometimes I need to complete that preamble, that opening statement, the monologue, to be able to cover as much as possible in the show. So, Valet, if you want, I had a look at the 120. I don't see that much in the 120. I do see a little bit of a bounce. Oh, I know. I'm going to make it real easy. It's trading at 895. If you want to start just a small position, it's already a starter position. I would put a stop not at the low of 887. 23 cents. It's a big percentage, 23, 24 cents. Yeah, I'm going to say that if it breaks under the candle of 2 days ago, 885, I'd make a 10-cent stop. It's got to work right now. That's it. Valet has to rally, and it has to rally right now. Otherwise, it's going to take into next week before it can retest and kind of get some things organized. So let me just say that if you want to start a little position now, that's okay. The reason why starting a position now is not a bad idea, although the chart looks just horrible, is that if somehow it saves the day by not breaking under 876 by Monday or Tuesday of next week, but instead has actually climbed into the 915 area, it's not a big deal. It's 20 cents, but just say you can do that. That's when I'd think of adding a little trading position, and the trading position has a target of 939. I'd just go step by step. That flat stochastic is a death trap. You want to pop right in and be heavily invested unless it makes a V-shaped pattern, and that's why I'm saying it has to work right now. A V-shaped pattern will get it into the 9%, maybe the 11% area in the stochastic, but you really need speed. So that's the way I'm looking at it. Okay, so now let's go. So that's Valet. Then the question came up. I had a bunch of other questions, but I will deal with them in the general market overview. And that VIX index, how come it goes to C? How come it goes to B's and C's and can fail in the weekly chart? I'll talk about it when we get back. It's a good question, and I'll try to deal with it as soon as we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. So the VIX index, we're looking at Dow's down 44, S&P's down 421. And the volatility index, CBOE volatility index, is trading at 13.27 right now, up 35 cents. But it went from 10.28, spiraled higher to 31.06. That was that turnaround day, October the 15th. And that was C. And now it's come back very deeply. It really should be a C minus at this particular point. And it says, the history of this says that there's a cup formation, and the next time that there should be a spiral to the upside would be in about 1, 2, 3, 4, 5, 6, 7, maybe another 3 weeks or so to have at least a pop-up, and then it comes back down and makes a U pattern with a middle cup. So that it's like a soft W, but the bigger part of the arm on the left side than the arm on the right side takes many weeks. It takes 3-4 months, in fact, sometimes. So I'm looking at this and I'm saying, well, if history repeats, we might have usurped all the energy out of the VIX index, because look at the way the last 3 weeks, and we'll see what happens this week, but the last 3 weeks have those red candles. That's number one. Number two is, in the context of the VIX index, when you've gone from the left side to the right side in a pretty much, it was 1 bar early to the left side, right side price time match that I had drawn in here, that says that something dastardly has to happen. Something in the economy that is really, now it has to be something a little different to what happened before, but it has to be not intermittent. It has to start off and then become really ugly over a period of weeks to be able to sustain a move that takes the VIX back into the 20s. And at this particular point, I'm just not sure I see it. I do see it later on, but I don't see it right now. And so I'm going to leave the VIX right now to say at this particular point, the weekly chart is the one that just, it's more an observation. It's the daily, and the daily keeps failing. Look, it couldn't even today get over the 9-period moving average of 1377. The high in the VIX today was 1376. So we'll see. Until the VIX index goes into the 1450 to 1530 area, that's where the selling will be maintained. I don't think it's going to happen. This is just a 1 to 2 day consolidation, and I think we go to new recovery highs. We'll see. Hey, we're going to go to John in Philly. John, how are you?
Very good, Basil. Thanks very much for taking the call. So I wanted to just do a follow-up question to your QQQ analysis, please.
Yes.
Specifically, Basil, on the NASDAQ 100, we can look at the cash, the QQQs. We can also look at the NQ futures, NQZ4. If you could pull that daily chart up, that's the one I'd appreciate taking a quick look at.
I've got it right.
What I will observe on the NQZ4 futures.
Yes.
We had the explosive move off of the October 16th low into Friday, October 31st, Halloween Day. That's when the Bank of Japan added more money printing to its procedures. Right. And then since the NQZ4 futures, the daily chart has gone quiet, but making higher highs, and really interesting in your Chapman wave count, we have gone very quickly from peaks on the daily charts, peaks B, C, D, now into leg E already, while not making much upside
sorry,
progress.
John, hold it. John, are you talking about the NQ? Because I've only got it in leg D right now.
Goodness gracious, I've got leg E. And there's no...
My first peak A was on the 28th of October. And then there's a lower high at 40.96.25 instead of 40.96.75. So that makes a peak. And then the moment it goes 25 cents above, that starts leg B. And then B stops on the 3rd of November at 41.73.75 because the next day there's a slightly lower high.
I think you missed a count in there, Basil.
I have? No, I haven't got anything.
Right after B, then there's a C, peak C, then a D.
But wait a minute. I've got the 5th of 41.76.25, and then the 6th. Was the 6th a holiday or something? What was the 6th? The 6th was the other day. Hey, why don't I have anything for the 6th? Why do you have the high? Was there trading? Let me just go to.
Yeah, I have got peak B on Monday the 3rd. I've got peak C on Wednesday the 5th. I've got peak D on Friday the 7th. And my data, I know my data's clean. Anyway, besides...
But my QQQ series matches my NQ because I have... But you have the 6 as a lower high. So that would make the NQ... Okay, I've got it. So I wonder why there's a blank there. I've never seen that before. There's just no data at all.
Here's my question, moving past just the technicality of the data. My question is that now that we've gone and made, in rapid succession, subsequent peaks in the Chapman wave count. So we've done that.
Yes.
And gone virtually sideways while all the while the 9-period exponential moving average has moved up just underneath price. My question, what do you look for to give you a leading clue, advanced warning, that this type of pattern, instead of pulling back, goes immediately into what you call a recycled Chapman wave count higher.
And that's the pattern that I call the propeller shaft. Let me show you what it entails.
Thank you very much on that.
It entails pretty much the same formula and pattern as the stalk leg formation, which you're very familiar with. In other words, it makes an oval, kind of an oval pattern. But instead of going a little higher for the neck, the head, and the breakdown coming back into the oval, it creates, I couldn't even say it. It's going to be hard to get the words out, but I'll do my very best. It creates a one-to-one, just like my falling axe formation. It creates a one-to-one with the oval. In other words, I don't even know if I want to do this, but I will. No, I can't get that down. In other words, the move in the QQQ series from 90.24 to about the peak C 102, that's 12 points, goes from the low, in this case it'll be the low of 100.67 to the upside to 112, excuse me, to 112, 113 in a measured move.
Let me ask you this. You mentioned that phrase. You mentioned propeller shaft. I'm wondering, can you direct me, please, to where on the Chapman Wave CD, of which I've got the copy, what chapter I go to see what you've written on that very topic?
Let me see if I can find it during the break. But let me also see if I can go. I think it was, I know these, it's like I've got this perfect memory for the chart patterns, but lo and behold, when it comes to remembering which stock it was, I always unless I write it down, I forget. So, okay, here it is. You see the monthly chart of the IYT. And you'll see that there's a little circle there, which is both an instant restart, but it is also a little bit of a sideways consolidation. And that's that move from peak D in January of 2014. And then it broke out. That kind of pattern, imagine that it goes for maybe 2-3 bars more to the side. It could even actually go for 8 bars, 10 bars, but it really is a mid-level. It turns out in the end to be a mid-level consolidation, creating a measured move from the most important trough. In this case, it's the trough from 85.83 with a 91 round number close, the month of November of 2012, going to this high here of 135. That's January of 2014, and that's the measured move. And normally what I would do is I would go like this, and then I don't like messy charts, so I try to change the color so it doesn't look too garish. And then I'd do that, and you'd get yourself a measured move. And in the IYT, it says that at some point in the future, perhaps 2015, 175 will be hit, and it's at 162. That's 13 points higher. So I'm just talking about techniques, and I don't want these actually to become projections that I'm saying. I'm just giving you examples. I know that I can find them if I just don't have that book right in front. I can't grab it. I have to move away. So I've got a book that has all of these patterns, and I've got fantastic examples of them all over the show. It's not in front of me right now. I actually put it aside for a little while because I was working so hard on something else that I can't find it right. It's out of reach. It's just out of reach. So I will find, and remind me tomorrow. In fact, I'll make a big note of it right here. And it says, propeller. I said it the other day. In my work, for my subscribers, there was something where I said, we've now got a propeller shaft breakout. So I don't know where it is right now. Maybe it's here. Hold on a second.
Basil, I will thank you for being so generous with your time. I will sign off here and merely ask if you recall in which chapter of the Chapman Wave CD that pattern is discussed. If you could share that with us, then I'll go actually read up on it myself.
I will do that during the break. Okay. Thank you very much for calling, John. Always great to hear from you. And look at this.
Basil.
Look at the QQQ series, folks. It looks like it's gone sideways for about 2 weeks, but it's been rising, making higher highs. But the fact is that it gapped and hasn't filled the gap. That gap will be filled at some point. When is going to be very important. So peaking in the den says, so if I hear Z correctly, that's John has just called, who's in the den, is asking if the NASDAQ is going to recycle, Basil. Can you tell us today, right now, this very minute, whether that will happen? No, he didn't say this very minute, but he did ask. So I'm going to say to you that when I look at certain stocks, now, this is so easy. The characteristic of a bull phase is that every correction lasts either 1 to maximum of 3 bars, and it makes higher highs and higher lows. And every bit of news that should be deemed negative is treated positively, and every single piece of positive news is treated positively in a bear phase. Every single bit of news is treated negatively. And in a bull phase, the price invariably closes nearer the high as consolidations happen intraday. And in a bear phase, consolidations land up seeing the price close towards the low of the day. And that makes it as simple as I can phrase it. Now let me go to the question, because it's the question that we're all asking, and it makes it really easy if you can know the answer. And the answer is, I have to consider that a close this Friday above the doji candle high of the weekly chart in the QQQ series above 102.03. It's trading at 102.33 now, come back nicely, at the highs of the day, in fact. If, in fact, there's a close above it, it says that the following, this is my own rule of candlesticks. And let me just remind you that Steve's giving a course on all these different techniques that he uses, how he applies them. Should be a wonderful course. Check it out right here on TFNN. Now, what I do with the candlestick charts is I've boiled it down just to a couple, just a handful, 3, maybe 4, but it's really 3 candlesticks that I use all the time, and they produce excellent results. And I don't know if this is going to be the same thing, but normally what I would say is after a doji candle, a close above that, the very next bar, if it closes above or closes below, the very next candle should have at least a higher high if it's closed above, or a lower low if it's closed below. That's the second week after the doji candle. But be careful, because the wick of the candle will likely want to be tested that second bar after the doji. Eyes glaze over. I hope I was clear. The second bar is the most important bar if you've closed above or below the doji. Now, we've got 86% in the stochastic in the weekly chart of the QQQ series. We've got a doji candle that is going to be possibly, now here you go, John, a doji candle can become a halfway marker from an important low point or a high point. And if that's the case, you could get the 1-to-1 on the upside if this candle is going to produce that kind of result. But there's the resistance, that up channel inside track. I'll be back. Basil Chapman. Dow's now only down 18. S&P's down 1.8. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
All right, so here's the answer, John. The answer is that it's not in my CD, just in the Chapman Wave. And I'm a little surprised that it's not in my CD because I used it from way back from when I used to hand chart. That was one of the characteristics of when you hand chart, because you're looking at closing prices, and there'd be this tiny little cluster, and then you'd get a move to the upside and would create almost a one-to-one or an exact one-to-one extension. My thinking now is that it was at the time that I was working on the stalk leg formation, and it was kind of new, the stalk leg formation, not very new, but kind of new. And I needed more time to use it. I used to use it only the stalk leg on the Dow, but it's a pattern that repeats everywhere. But I used to use it very specifically for the Dow, and that had that same oval formation that extends to the upside. And then maybe I just decided that the two go together and I would not include it. So essentially what it looks like, let me just draw it for you right now. It's a real simple thing. It looks like this, where you get a move to the upside like that, You get a little consolidation. Well, I shouldn't say little, but it's a narrow consolidation. The most important thing is it's narrow, and then like the stork leg formation, the neck is what really extends out, and it extends up, I should say, and it extends all the way. And that can go to a 1-to-1, a 1, 2. It's just like the stork leg. The difference, there's your stork leg formation right there. And this is the leg, there's the body, there's the neck. And here's that's the head. Here's the beak. Now, thank you for bringing it up. I don't know how many times I've been wanting to do this. So no, I can't. So the answer to Al is no, I can't. So be prepared, because I do have to leave. So the stork leg formation, when the beak is completed, very often it starts a brand new move to the upside. I thought of it the other day, then I forgot it, then I thought about it, and you just reminded me of it now, because I'm looking at the stork leg formation in the, this is what the stork leg formation looks like. Let me go to this right here. Look, there it is. Stork leg formation is right. Of course, I'm not going to find it. That is so funny. All right. Stork leg formation is something that we see very often in my work, cumulatively, but it doesn't happen every single week, but I mean cumulatively over a year, you'll find that the pattern has been shown very often. And that's really what it is. What it is a stork leg formation that goes in the neck formation to a 1-to-1 extension. That's really what it is. The result should always be the same. When it's completed, you come back down. But the big difference is that if this is a weekly chart, leg A, well, in this case, I've called it a D, but if it's a leg A in the weekly chart of the QQQ series in the Dow, I've called it leg A. All right, let me do this because we're about to wrap up. I'll deal with it more when we get to our Friday, Technical Friday, or maybe even tomorrow. So in the meantime, back at the ranch, look at this weekly chart. We've made a new recovery high this week. That's a positive. We're above the up channel and inside track Chapman wave, inside track reversal area, and the up channel resistance, and the stochastics at 84%. The MACD is good. Not great, but good. The beta is good, but the actual pattern has got this W pattern, which can very easily turn into a sine wave as it goes up and down and up and down, which in fact could create weeks of higher highs and higher lows in the weekly chart. I don't want to go there right now. Forgive me. We've got long positions. We'll see how long we can keep these long positions. I'm getting really close to at least starting to look at potential shorts, and that might be just short term. All I can say is that a close below 17,000 in the Dow changes the pattern. Let's keep it as simple as that. Hey, thanks for being here, everybody. I'll be back tomorrow. Stay tuned for the next show. And I will be, let's see, tomorrow's Thursday. Yep, I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.